Dear clients, I'm Richard, Dealing Manager from Phillip CFD. The three major US equity benchmarks ended last week on a mixed note. The Nasdaq Composite flashed record high yet again. The S&P was flattish, while the Dow Jones Industrial Average posted a modestly negative performance. I believe such performance divergence is a reflection that investors are caught in cross-currents between uncertainty arising for Trump's policy implementation risk and concern on stretch valuations. For instance, S&P 500 trades at 17.5 times forward PE on the one hand, and earnings optimism for the 4Q16 US results seasons on the other one. To begin with, on the earnings and economic front, overall investor sentiment was sanguine. According to FactSet, analysts were forecasting a 3.2% year-on-year increase in 4Q16 for the S&P 500, and hence, high earnings expectations appears to buoy the market. Investors also welcome producer price index and retail sales data, which came in above expectations, even though the enthusiasm was slightly dented by an unexpected weak tip in the University of Michigan's gauge of consumer sentiment. But has the market gotten ahead of itself? Well, last Thursday, during the first post-election press conference by President-elect Trump, cross-asset price actions gave market a preview of how a Trump disappointment might be manifested. Gold briefly broke above $1,200 per ounce, a key technical level. US Treasury benchmark 10-year yield fell to 2.35%. The US dollar index fell 0.4% against a basket of currencies, while the equity market staged a pullback, basically an unwinding of Trump's trade. To sum up, it is going to be an eventful week ahead, leading to the 20th of January, US Presidential-elect Trump's inauguration. There is a lineup of Fed speakers, a meaningful ramp-up of the earnings season, a 4-day World Economic Forum held in Davos, amid a relatively light US economic calendar. Will last Thursday be a signal of further cracks in Trump's world, or will Trump firm up on his tax reform, deregulation and stimulus plans in his inauguration speech to further booster the Trump's market rally? Will the earnings releases exceed expectation to justify elevated valuations? Investors may want to err on the caution side as these market events unfold. Clients may consider using Phillip CFD and Phillip ETF to capitalize on global trading opportunities in both rising as well as falling markets. This is all for today, and hope to see you soon in our next round of market commentary. Thanks for watching.